The session is scheduled for 1 hour. We'll divide the session into two parts. First part will be the presentation, and the second part for Q&A. Appreciate to note down your questions for the second part. Now I will hand over the floor to Mr. Saeed Abdullah Al-Hatmi, CEO of Ahli Bank, to start the session. You, sir.
Assalamu alaikum. Good afternoon, and thank you all for attending this session. My name is Saeed Al-Hatmi. I'm the CEO of Ahli Bank. With me today is Habib Al-Hamid. He is the investor relationship. Also, I'm joined by our CFO, Mr. Shiram Dalal, and our head of strategy, Anand Ramli. We will have the first part, a small presentation from Ahli Bank, and then we'll address any queries or questions in the second part, as stated by Habib earlier. But before we start the presentation, I just would like to note that the 2022 was yet another good year for Ahli Bank in terms of the financial performance, the steady progress we made in execution of our growth and expansion strategy, and the substantial efforts on the digital transformation roadmap. Also, during the year, Fitch Rating has upgraded Ahli Bank to BB- with a stable outlook. As I said, we have now a very short presentations. I'll leave the floor to Anand to take us through these presentations, and we'll address the Q&A in the second part. Anand?
Thank you, sir. Very good afternoon, and a warm welcome to our presentation today of the year-end results of Ahli Bank for 2022. We start with the general disclaimer. Of course, whatever we are discussing with you today, the primary objective is to discuss about financial performance for 2022. The intention is not to give any indication in terms of the future or the forward-looking statements. Right. We'll start with the overview in terms of the macroeconomic scenario, and then we'll move into the financial performance of the bank. Right. So Oman as an economy has shown strong resilience in terms of recovering from the dual shock of pandemic as well as the oil price collapse in 2022. It has registered a growth rate of 4.9% in terms of GDP growth rate for 2022, and is expected to register about 3.2% in terms of growth for 2023. Now, this has come on the back of a strongly supported oil price. As all of us know, oil price was at the bottom about 35 to 40 in 2020, and it had really grown up to average of about 70 per barrel in 2021, and touching about 100 in 2022, which has really resulted in providing the added impetus for the Oman economy to stand back on its feet and start growing from then on. We expect the oil price at the current levels of around 82 is what it is at the moment, but we expect the average oil price to stay around 85 for 2023. And with the break-even oil price for Oman pegged at about $67 per barrel, that gives us enough headroom and cushion for the economy to maneuver their fiscal stability plans, as well as the overall objective of reducing the burden on the economy. We are also seeing that happen in terms of the overall debt burden ratio to GDP coming down in the last couple of years. Just to add to what Syed said a short while ago, this all has resulted in Oman as an economy getting upgraded in terms of credit rating from almost all the rating agencies, and that's what we have highlighted in the slide towards the end. Fitch, S&P, and the Capital Intelligence and Moody's have a BB plus a stable outlook for Oman as an economy. Now, just a quick roundup on the operating environment, which is essentially the banking sector. What we have on top for you is basically the growth, the compounded annual growth rate of the banking sector in terms of total assets, customer deposits, and loans and advances. But what I want to focus now is in terms of where are we in terms of the overall banking sector. The Oman banking sector fundamentals definitely improved the last couple of years. 2021, I would say, was a bit of year of stabilization, and 2022 As all of you must have noticed, we've seen most of the banks announcing better performance compared to 2021. In fact, some of them have actually, recorded very good bottom line and overall growth. So in terms of the asset quality will remain a bit of a key risk item or something which we have to observe a bit closely, given especially the fact that the interest rate, which has been increasing for the last 15 to 18 months. Last year alone, Fed increased the interest rates by almost 425 basis points, and this year, the beginning, by another 25 basis points. So we are keeping a very close eye in terms of these developments. And also high levels of portfolio concentration for some of the banks could also pose a bit of a risk. I'm staying at the banking sector level. This is nothing specific to our bank. I'm still staying at the banking sector level. In terms of capital, most of the banks are well capitalized and they have enough cushion in terms of absorbing any kind of provisioning or stress in terms of additional NPLs. As we all will remember, last year when Central Bank of Oman did the macroeconomic stress testing, majority of the banks had actually passed those stress testing in a positive way. So there is nothing much to worry from the industry perspective. Funding and liquidity has definitely improved at the back of the oil price. And of course, the funding level is a bit comfortable now. But we had some issues in terms of Riyal Omani funding some time ago when most of the corporates and government entities switched from dollar to Riyal Omani denominated loans. But now, as of now, the funding situation is a bit comfortable. Like I mentioned, profitability has definitely gone up much better compared to 2021. In 2022, most of the banks have almost declared double-digit growth in terms of their bottom line. Government support is definitely remains very high for two reasons. Obviously, one in terms of the elevated oil prices, and second, of course, the importance of banking sector in terms of the overall economic growth of the economy. So that is the context and the background before we move into the performance of Ahli Bank. A very quick overview of the bank. Most of you know the bank, so I'm not going to spend much time on this, but just to give you certain highlights. As of December 22, we had totally about 42 branches, so our branch footprint has increased in 2022. Out of that, 19 have been under the Islamic, and the remaining 23 is on the conventional side. In terms of our business model, we've got 5 main business segments part of the bank, which is retail, commercial banking, investment banking, treasury, financial institutions, and Islamic banking. We have a strong support, strong institutional shareholding, and a strong support from the shareholders. And in terms of the market share, we are a growing bank, and in the last 4 to 5 years, we've really grown consistently. And as of December 22, our market share in terms of loans and advances is about 9.2%, and we hold a similar percentage when it comes to customer deposit, when it comes to market share. And like Syed mentioned, Fitch ratings as assigned as BB- with a stable outlook as a bank's rating. Now, on the right-hand side, you will see some of the key performance highlights, just to indicate in terms of what I meant by the growth trajectory, what the bank is currently undergoing. You will see that in the last 5 years, the bank has grown its total asset footing by almost 9% on a compounded annual growth basis. Gross loans have gone about 9.3%, deposits a similar 9.7%, and our branch network has almost doubled compared to what it was in 2017. And that is part of a clear strategy in terms of expanding on the retail business, the benefit of that, which I'll highlight in the subsequent slides to come. The key achievement, of course, on the left-hand side, you've got the shareholding pattern. I think all of you are aware about it. So I'm going to skip that part. And we're going to discuss a bit on the key achievements. Total assets crossing 3 billion. The incremental market share, which is how we measure our growth and development, for the last 3 years has been 20% in terms of loans and advances and 25% in terms of customer deposit. Now, we're talking about 2 different growth rates here, or market share. One in terms of the static market share, which is the year-end position. The other one is in terms of the incremental market share, which is the growth vis-a-vis the growth in the industry, growth of Ahli Bank vis-a-vis the growth in the industry. In terms of performance, Ahli Bank still has got the highest return on average equity in the industry. And combine that with a lowest NPL ratio in the industry. And we've got a couple of firsts in the industry in terms of first bank to introduce digital NTB onboarding customers. We are proud to say that almost 80% of our onboarding today happens through digital channels. And Ahli Bank last year introduced Tamkeen, launched Tamkeen, the first crowdfunding platform for SMEs in partnership with a leading fintech from the region. Moving on, I just want to highlight in terms of the key business segments and how we are organized.
Hello.
Hello, we're not able to hear you out, Habib. Can you hear me?
Bilal, you are with us? Yeah, Bilal is there.
Can you hear you?
I'm able to hear you now. The
Okay.
last 3 minutes, no.
Now it's fine. Oh, it's fine. That's it.
Okay.
Gentlemen, do you hear us? The rest?
Yeah, yes, we can. Thanks.
Yes. Yeah. Okay. Yes. So the screen.
Habib, again, I can't hear you if you're speaking anything.
No, not yet.
We haven't started yet.
Just
Okay.
checking everyone is inside and it's okay. Yeah. Okay. And then I
Right.
can do this slide.
Sure. Thank you. So like I was mentioning, we are internally organized in terms of two broad business segments. One is the retail side, the other one is on the wholesale banking. On the retail side, like I mentioned, we've got specialized teams catering to each of the target segment what we have in terms of retail, premium, private banking, wealth management, and Islamic banking. We offer our services through almost 42 branches, with 19 of them being Islamic. And today, as we speak, Ahli Bank has got the second largest branch network on the Islamic banking side, only second next to the largest bank in the country. Our constant endeavor is to try and widen our customer base, both on the conventional side as well as Islamic side, try and offer products and services through as many digital channels as possible, and try and increase the number of products per customer as we move along. On the wholesale banking side, we are organized in terms of corporate banking and SME, treasury, FI, and investment banking. We offer a full array of services when it comes to corporate banking, and our sectors which we focus are in alignment with the Oman Vision 2040, as well as the diversification strategy of the economy. Treasury acts as basically a support function to support the corporate, commercial, and the government institutions, and of course, it acts as our international arm for Ahli Bank when it comes to developing relationship with financial institutions locally as well as abroad. Our investment banking division is a full-fledged operation, which has got corporate advisory, it has got asset management, as well as a very active brokerage desk as well. Now, in terms of the contribution of these two sectors towards the overall banking business, in terms of the overall contribution, the retail segment contributes around 24% in terms of total assets, and the rest, 3/4, is coming from the wholesale banking. In terms of the net operating income, almost 1/3 comes from retail segment, and 2/3 comes from wholesale banking. Now, moving on. Yeah, sure. Just a quick snapshot in terms of Islamic banking. Islamic banking, we launched in 2013. Ever since the launch, the Islamic banking side of the business has really grown leaps and bounds. We have consistently been able to achieve a growth rate which is much higher than the banking industry as well as our peers. At the moment, we have total assets of close to about 560 million in terms of the asset footing on Islamic banking, and our total gross financing under Islamic banking close to about 500 million, and deposits about 480 million riyals. Now, like I mentioned, our growth in Islamic business has been consistently good. So the contribution of Islamic banking business to the overall kitty of the bank has also been consistently improving. In terms of the share of total assets, I just want to draw a parallel here to say where we were in 2020, which was about 14.6%, and currently it's about 18.2%. And in terms of the share of operating income, Islamic banking, Ahli Islamic, was contributing 7.5%. Now currently it's almost contributing 15.1%. So practically you can see that the total share of operating income has doubled over a period of last 2 years. Now to just focus in terms of key performance metrics, 2021 vis-a-vis 2022. Our gross loans and advances increased by about 4.4% to reach about 2.6 billion. Our deposits increased by about 5.3% to reach about 2.3 billion. Our operating income increased by about 11.2% to reach about 91.7 million. And of course, we reported a profit of 33.1 million, which translates to roughly 20% year-on-year growth compared to our 2021 performance. Some of the key ratios to highlight are return on average equity, which is one of the highest in the industry, is about 10.8%. Return on average asset is about 1.1. Cost income is 43.9 compared to 43.2%. Our NPA, which is again one of the lowest in the industry, is about 3.8%. We have some of the trend lines for these in the next slide to come, but I just want to highlight in terms of the performance for the year, in this slide. And our capital adequacy is about 17% compared to the regulatory overall requirement of 12.25%. Right. In terms of NIM, we have maintained our NIM despite the fact that there's been a substantial increase in terms of the interest rates, almost by 4.25% by Fed. We've managed to maintain our NIM at about 2.2%. Our return on average equity, which I mentioned in the previous slide, has improved from 9.7 to 10.8. Return on average equity, 1.1% from 1%. Cost income ratio, we are seeing a very small spike from 43.2 to 43.9. And that is essentially because of two key reasons. One, of course, like I mentioned to you in the earlier slide, we are expanding our branch footprint. Last year alone, we increased 5 branches. So one is partly because of the retail expansion. And second thing is the investment what we're making in digital transformation. Digital transformation has been a key cornerstone in terms of our growth story for 2022, and it will continue to be in the years to come. We will also highlight some of the key digital initiatives, what we've done in 2022 for your consumption. Now, in terms of other income to total income, it was about 19.5%. Of course, as far as this is concerned, we are definitely below the industry average. And it's our constant endeavor in terms of identifying those additional pockets where we can try and improve the contribution from other income to total income. And in absolute terms, I just want to highlight here is that in terms of the absolute terms, the other income to total income has increased by about 3.5%. But the net interest income had a larger share of growth by about 13.3%. That's the reason why it remains same compared to last year. Just to highlight, the capital adequacy, which I mentioned earlier, is about 17% compared to the regulatory requirement of 12.25%. Yeah, just to highlight the funding profile and the lending profile of the bank as we stand today. Almost 77% of our source of funding comes from the customer deposits, and only about 8% is from due to banks. If I were to further slice the customer deposits, we have 37% of the customer deposits coming from retail banking, 36% from corporate banking, and about 27% coming from institutional funding, which is in terms of government as well as government deposits as well as pension fund. I just want to highlight here is that as part of our retail strategy, we have ensured that the portion and share of retail banking keeps on increasing. Just to give you a parallel here, in 2018, the contribution from the retail segment was about 15.5%, which is today almost standing at 37%. Similarly, the institutional funding part in 2018 used to be around 47%, which is now reduced to 27%. So clearly, signifying the benefit in terms of expanding our branch footprint from 20 to about 42. Now, in terms of gross loans, we've given a split in terms of the sectoral allocation. And below that, we've also highlighted in terms of what constitutes the retail banking and corporate banking. 29% of our total loan book constitutes retail, and 71% of the book is still corporate banking. Now, the most important slide, the credit performance as well as the NPL. This slide is divided into 4 quarters. We've got the overall NPL of the bank, which is about 3.8% today compared to the industry average of 4.5%. Diving further down, you have stage 1, which is 82.4% in terms of the portfolio percentage compared to the industry of 81.2%. And when it comes to stage 2, it's 14.6% compared to the industry of 15.8%, and stage 3, it's in line with the industry. So the ones where our book is in stage 1, we have a higher ratio compared to the industry, and where stage 2 and stage 3 is concerned, our portion of the portfolio is lesser than what the industry is. In terms of the stage 3 provisioning coverage, we are currently about 60.1%, which slightly improved from about 58.9% in 2021. In terms of key focus areas, our strategic focus areas remain the same in terms of growing in deposits and increasing customer base, and that goes in tandem with the branch expansion policy what we have. Going forward also, our growth in terms of the retail footprint will have a judicious mix between physical branches as well as the digital branches. And of course, we are taking a number of initiatives in terms of enhancing our fee income to be able to reach the industry average. And prudent asset growth is the bedrock of our growth strategy. So we'll continue to be prudent in terms of our asset building as well as new asset growth. And digital transformation, like I mentioned earlier, investment in digital transformation is going to continue for the next couple of years to come, and we will definitely be seeing and reaping the benefit of this in the years to come. So overall, our focus is going to be in terms of increasing our bank's market share, which is in line with the consistent growth of what we've achieved in the last 4 to 5 years. Now, these are some of the digital initiatives in 2022, which we want to highlight to you. Tamkeen, which is the crowdfunding platform, which I mentioned to you, it's been a big success in terms of the local market. The first time ever a bank has joined hands with a fintech to introduce this. We've had a very good response, so that was one initiative. We launched our Ahli Express, which is the digital branch, through which we are offering a number of services to our customers without even the need for them to visit our branches. We have substantially enhanced our mobile banking app with a new interface as well as customer experience. A digital wealth app where the customer can actually transact and make investments through our dedicated wealth management app. We have invested a lot in terms of improving our process efficiency, including making most of it straight through processing. So digital process automation and robotic process automation. We have done a number of initiatives, and we will continue to do that and automate as many processes as possible for the convenience of the customer in terms of quicker turnaround time as well as better customer experience in the years to come. We have recently launched instant card issuance at our branches as well as paperless PIN. These are some of the key initiatives what we have done in 2022, and like I mentioned, we will be coming up with more of such initiatives, in 2023 as well as the years to come. Now, in conclusion, just want to summarize in terms of what is in store for 2023. In terms of asset growth, we will continue to adopt prudent approach in terms of loan growth. Expanding our deposit base is absolutely key to our growth. We have constantly expanded our retail footprint, which has benefited in terms of increasing the customer deposit, which has also helped us in terms of maintaining our NIM, and we will continue to do that. We will increase the share of wallet when it comes to the fee income. And digital transformation is something which will continue in terms of bringing in most innovative products to the market and also new products and services to the market, which will help in terms of reaching out to new customer base for us going forward. And overall improving the operational efficiency, which will help us in terms of maintaining a very healthy cost-income ratio. This is more or less what we had for you today in terms of presentation and terms of performance. I will leave the last slide here, and we can now delve into the question and answers. Thank you so much.
Okay, thank you, Anu.
Okay, we'll open the floor for the Q&A. Any questions, queries, please feel free. Abbas, go ahead. Unmute yourself.
Good afternoon, gentlemen. Thank you very much for the presentation. Congratulations on a good year. It's been a challenging couple of years for the entire banking sector, and then Ahli Bank has managed to sort of come out of it unscathed. So congratulations on that. I have a couple of questions. The first one's a comment rather. I was going through the presentation, and I think I raised this in the last call, and this is going to be my request to all management teams that when we speak about ROEs, could we speak about adjusted ROEs, please? Because some companies carry larger perpetual loans than others, and it's fair to sort of compare apples to apples. So if you look at adjusted ROEs across the sector, it would make sense, right? Because capital is not free, and there is a perpetual interest that comes with it. So when I look at adjusted ROEs for Ahli Bank, I mean, it's not 10.8, it's close to 7.5%, pretty healthy. I mean, barring, I think, NB and Bank Muscat, Ahli Bank's right there. But, this is just a comment from an investor, who's been tracking banking sector very, very closely for the last 15 years in Oman. Makes sense to, sort of look at it on an adjusted ROE basis. I mean, that's just a comment from my side. I don't know if you guys are you agree or not. But this is just something I wanted to ask you humbly to sort of, if we can start talking about this. And I'm going to do the same in all calls as well. So this was a comment. The second thing is, you rightly mentioned that you're quite comfortable when it comes to capital adequacy on a total basis. But of course, there was a news item this year that you're looking to raise a rights issue. But at the same time, as an investor, when I look at a pretty healthy dividend payout, I think close to 70% on adjusted profit, how do you sort of look at the two? At one hand, you're going to pay out close to 20 million riyals in dividend. On the other hand, you're going to come and do a 50 million rights issue. Does it make sense to become a little? Because even though you're okay on the total adequacy side, you're not really, on a tier one, common equity tier one, you're a bit stretched. It's one of the lowest in the sectors. What sort of targets do you have in mind to build this up? Or are you planning to do this every year? Because if growth has to pick up, you might have to keep coming and giving dividends on one hand and taking capital on the other. So what's your view on this in the next 2 to 3 years?
Okay, we'll start with the first questions on the adjusted return on the equity. We do monitor both the return on equity as well as the adjusted return on equity. AT1 become a very common and popular instruments to boost the capital base in the financial sectors. And as you rightly said, most banks, they have some AT1s in their box. So we do agree both ratios are internally, and I'm sure by all the analysts and the investors are monitored very closely, and it's part of the full disclosure and set of the financials all available, and we have a specific guidelines in the banking industry when it's come to the Basel III disclosure in our financials. The second aspect, which is the right issue, we are in process, as you rightly said, of issuing up to 50 million additional capital, and that's to improve the CET1 level specifically. And again, it's a business case, it's the growth story, and we have, as we have detailed in the presentation, a clear growth and expansion plan for the bank, and that's a part of the board level approved 5-year strategy. So all the capital planning, whether it's 2023 or beyond, is part of the overall growth and expansion strategy of Ahli Bank.
Okay, so as of now, you don't have a target in mind that at some point you feel like, I'm going to go up to 12% CET1, so I don't have to come back and sort of raise. I mean, you don't have that in mind for 23 or 24.
See, as long as you are having the support from the investor and the shareholders, there is a fine line to effectively deploy the capital, and there is no point of calling for a huge capital and it will only be deployed after a number of years. In Ahli Bank, we've been carefully planning the capital enhancement of Ahli Bank throughout the last number of years, and we never faced any kind of challenges in raising the capital. So what we anticipate in the next 2 years, 50 million will be sufficient in terms of a CET1 enhancement to address the growth requirement of the bank. Beyond that, we will definitely again reassess, and if required, we will come to the market and to the shareholder for additional capital.
Understood. Thank you for that. I'll wait my turn in the line. I have a few more questions, but I'll let my other colleagues ask you. Thank you for the clarification.
Thank you.
Yes, Mukesh?
Yeah, hi. Thanks for taking up my question. Congratulations on a great set of numbers. My query is related to basically on the quarterly loan book numbers. So basically, you have been consistently growing your loan book from 2018, and even in 2020, we did not see any decline in loan book even on quarterly basis. So I mean, the last quarter in Q4, there has been a decline, which is a rarity. Can you please explain what happened here and what is the outlook on the loan book growth? So that's number one question. And the second question is related to basically loan book growth and the net interest income. So if you look at the net interest income, it was lower by 9.3% QOQ. I mean, between third quarter 22 and fourth quarter 22. And so what were the reasons that led to this decline, quarterly decline in NII and the quarterly dip in NIM? Thank you.
Bilal, you want to take that?
Yes, thank you, Mukesh, for your question. The decline which you have seen in the asset, as you know, in the market, what has happened in the last quarter, the interest rates have significantly moved up, and a lot of those assets which are on marginal basis are not making sense in terms of competitive pricing. We decided to what you call move out of this rather than running a negative what you call NII book on those assets. So that's more of a, adjustment for what actually happened in all of a sudden in the market in the last quarter three and quarter four, in terms of Fed increase rate, which affected the Omani real interest rate, and where we saw that the competition is probably giving loans at rates which are not making marginally sense. So we decided not to be in the market and compete for that type of assets. So that is an explanation for what you call your first question, where we saw a bit of a decline in quarter four. Now, I can't give a very strong what you call forward-looking statement, but I would just say that quarter four was basically one of in terms of the situation which was at that point of time hovering around. And in terms of NIA, as I'm not sure exact numbers, Shriram is there, but there is a decline again because of the very high interest rates. You know how the Fed has moved and what type of repricing on the dollar deposits or bilaterals loans which the bank had, which has affected most of the financial industry. And all those loans and bilaterals have been repriced, which would have resulted in what you call a bit of a decline there.
Yes, added to that, we had repaid some of the bilaterals during the Q4 because of the higher interest costs.
Okay, got it. Congratulations and all the best. Thank you.
Thank you.
Any other questions?
Okay.
Mukesh already is done. So Abbas or your colleague, do you have any other questions?
Yes, sir. If I may, when I look at Ahli Bank and I look at the deposit mix, right, and you've already spoken about a focus on the retail side. What's your sort of, because I think the retail growth both on the deposit side goes hand in hand with branch network expansion. You've obviously, spoken about how your retail business is higher margin. You are one of the few banks that actually has a lot of leeway to grow, a lot of room to grow your retail as well. So is the strategy going to be, around branch expansion, or are you looking at any other means to sort of grow your retail? Because I wanted to link that to what's happening on the, on the Fed side, right? Interest rates have moved up. And now your NIMs are going to come under more pressure because you have a higher mix of time deposit than, let's say, a Bank Muscat or an NBO. So in that regard, what's the strategy to actually make retail, both on the deposit liability and the asset side, a bigger part of your bank in terms of key focus areas? That's my first question.
Okay.
I'll take this side, or you're going ahead?
Go ahead, Bilal.
Yeah, Abbas, right? Hello,
Yes,
can you hear me?
That's Abbas from
Yes.
Vision Capital. Yes, sir.
Yeah. See, this retail is a core strategy for the bank, and you would have seen if you're following our bank for the last 2-3 years, or rather 3.5 to 4 years, how we have been expanding. Now, in terms of the branches, we'll continue to have a mix of digital branches and physical branches in terms of our growth strategy. You would have seen our Madinat Qaboos branch, which is fully digital branch, which has come. We're going to open few more digital branches like this, which will be taking our branch network on a higher side or increased numbers. Now, as you rightly said, when the interest rates are high, retail makes more sense in terms of low-cost deposit. And retail is not a 1 year or 2 year or 3 year deal. It's a long-term deal. And we are in this business for very long term. So we'll continue to invest in retail, both in physical branches, as well as automation, digital, app, mobile app, to increase what you call penetration among the masses and the people as far as retail is concerned. And I'm confident we'll be able to deliver on that.
Okay. And you don't want to give a forward-looking statement in terms of what's the target? What's the target, for example, CASA ratio? What's the target sort of retail? Is that something you're comfortable sharing, or as of now you don't want to share that?
Habib, I don't know what the corporate governance what you call allows us to what you call share or not share. I mean, but probably what you call will not be able to give you a specific statements, but on a more generic thing, we can say the retail strategy is a focus for the bank. And that we can commit to you as a, management, then you will see us in this space for a pretty long period.
Fair enough. And my next question is, I mean, I think at the start, you spoke about what the challenges in the banking sector are, and you rightly said that cost of risk, NPLs are going to be a challenge, not just for Ali Bank, for the entire sector. You're just coming off a year when the moratorium for recognizing bad loans finally expired. There's a big restructured book. I believe Ahli's restructured book is close to 18% of the loan book, one of the highest in the sectors, if not the highest. And at the same time, when I look at cost of risk for Ahli Bank, it was the lowest, last year. So there's a bit of a disconnect there for me. Do you feel that when you look at YOY, 23 versus 22, cost of risk will move up sharply for Ahli Bank simply because I'm only looking at the risk that's evident in the kind of restructured book that you're carrying? And at some point, are you expecting it to go up to like the 1% mark where some of your peers are, and they've been building up provision for the last 2-3 years, which really hasn't happened for you? How do you see cost of risk behave knowing your book in 23? That's my question.
Okay, I mean, again, restructuring does not mean those accounts are of any significant high risk. So these are kind of slightly two different aspects. And as maybe we've explained last time, throughout the last year, we've been working closely with our customer in terms of aligning the cash flow into the repayment terms, given the new realities in the market during the COVID and post-COVID. Now, in terms of the credit rating of those restructured accounts, they remain of high credit rating. And we don't foresee any significant deterioration on the quality of the portfolio. We did not see that in 2022. We don't anticipate that also in the 2023. Restructuring, as I said, is more of realigning. There was a window given by the central bank, but restructuring as a process, it's been always, as a practice in the banking industry. Now, why those COVID-related restructuring were, specifically reported? Because there was some sort of relaxation given by the regulators in terms of the norms of the restructuring, and that therefore has been, summed up and reported separately. Again, just to emphasize the point, the restructured account most of them remain of good credit, and we don't anticipate any significant kind of deterioration in the portfolio. Overall, the Ahli Bank portfolio quality remains strong, and I think if we are not the best, we will be the second best, maybe, or one of the best in the industry. Our underwriting criteria in terms of credits, whether it's existing or new, remain very broadened, and we have not deviated from this policy in the past.
Can we move to Vishan? Also, you want to raise his hand? Vishan, please go ahead.
Good afternoon, gentlemen. Thank you for the presentation. This is Vishan Bhalla from Vision Capital. My question first was on restructured loans, which has been answered. Could you just shed some light on the provision coverage ratio? If I'm not mistaken, it is in the early 90s, and sort of what is the path ahead for provision coverage for 23 and beyond? If you could just let us know a target for the same.
See, the specific provision coverage ratio is 60%, and the overall coverage ratio is 93%. So there's no specific target, but the bank will maintain the required provision as per the IFRS model or the CBO requirement.
Okay, noted. And again, just a couple of, I think most of the questions have been covered by Abbas and my other colleagues, but just sort of your thoughts on where the key growth areas are for the economy. You clearly mentioned and outlined the growth areas for the bank and what your focus is, and that's well noted. But in terms of how do you see the economy and how do you see saw infrastructure spending coming along as a bank. If you could just give us your comments on the same. Thank you.
Okay. I think it's last few years, there were kind of a significant slowdown in execution of key projects across all the industries. Now, with the COVID behind us, and we have seen the positive sentiment build up right from the 2022, and the the bounce back in the economic activities, we do expect the government to go ahead in those kind of key industries being identified as the growth area across the economy. Now, we've been part of many of those projects currently, in the market. We do expect it might be slow, but there would be kind of a comeback on the tourism side. In the good support continue on the SME front as well, and all those kind of greenfield initiatives. The investment on the food industries had some challenges in the past, but I think the industry as a whole has learned quite a lot during the difficult times, and they are repositioning themselves. Logistics, again, substantial investment in the past, and we do expect the economy to leverage on those investments. So we'll be seeing quite kind of a good growth across different industries. Government also working very closely on the urban developments, and lots of projects, key projects, real estate projects is actually on the pipeline. That will give some sort of boost to the local economies and in different areas. So we quite cautiously, but we are quite optimistic about the economic development in the 2023.
Okay, noted. Thank you so much.
Okay, there is another question from Abbas.
Yes, sir. If you'll indulge me, I just have last two questions. I think the last time I spoke to Mr. Hatmi, there was Ahli United was in the process of being sold to KFH. Now, I think that happened in October last year. Have there been any plans, any sort of changes to Ahli Bank Oman as a conventional unit? There's absolutely no plans to sort of go Islamic. That's my first question. Have you heard anything about it? And my second question is just the HSBC and Bank Sohar merger is extremely close. We know both the shareholders have approved it, and as of what the market knows, the Bank Nizwa merger also hasn't been called off. There's no news on it, but it hasn't been called off. How do you position yourself in a landscape like this, where there'll be another large player that you have to compete against, Mr. Hatmi? These are my last two questions, I promise, and thank you so much for very graciously answering them all.
Okay, thank you. I think the AUB deal is quite straightforward, as you rightly mentioned. KFH, AUB is now part of the KFH. As far as the Ahli Bank Oman concerned, AUB remain at 35% shareholders. Ahli Bank is listed in the MSM, and any changes, at the shareholding level may not necessarily impact the operating model or the business of Ahli Bank. We do not anticipate at this point of time any changes. As I said, we had the board review and approve the next 5-year strategy of the bank last year, and there is no change on the business model currently we are working on. That much I can say on this. With regards to the merger and in the local market, I said that before. I think it's quite encouraging to see consolidation. This market need a bigger banks, but also we need more of bigger banks. In a sense, consolidation is good, but also consolidation may ultimately result in kind of a narrow competition in the market, and therefore maybe the newcomers should be welcome into this industry. I do not have any specific, details more than you guys when it comes to those current transactions, and I cannot make any further comments with the specific transaction at this point of time. We are also just watching the development in the market. However, from Ahli Bank perspective, we see lots of opportunities, not necessarily out of this consolidation, but there is enough opportunity in the market, and we are in a growth and expansion mood. We do believe there is enough market, and Ahli Bank will continue, in the right path in terms of execution of those plans and growth strategies, as I said earlier. So we do not anticipate a direct and immediate impact on any consolidation in the market on Ahli Bank business.
Thank you. Thank you for that.
We came to the end. Want to conclude?
Okay, if there is no further question, would like to thank you all for your attendance today and participations, and inshallah we'll see you next quarter, hopefully. Until then, thank you very much.
Thank you.